Hi guys, welcome back to the channel. My name is Adam, and in today's video we're actually going to be discussing as to how I became a private equity investor at only the age of 19. Before going into, the story of how the opportunity came about, I'll first talk about what a private equity firm actually does. So a private equity firm is a firm which looks to raise capital from either high net worth investors or other companies to invest in other assets which they believe will be able to appreciate in value over time. They pick assets which they believe will grow in terms of size and performance, size being growing in terms of employees, in terms of output, and performance being in terms of revenues and making more of a profit year on year, in hopes that they can then sell this stake to gain a profit for their investors. Me being an investor into a private equity firm, I would class as a limited partner. So I'd be a limited partner, and then the actual firm itself would then be a general partner. Me being a limited partner, I would have a limited liability. If the company was to go under for whatever reason, my liability would only be the stake in the investment that I hold. Whereas the general partner, being the private equity firm, would have all of their assets at stake should the company ever go under. Private equity differs from stocks in the sense that with private equity, you're actually in the investment for a fixed term. So you can't liquidate it immediately and it'd be classed as an illiquid asset. Whereas with stocks being traded on a public exchange, we can essentially sell them immediately, making it a more liquid asset. So that's the explanation of a private equity firm, and now it's going to be my story as to sort of how I got involved into private equity. My journey of becoming a private equity investor. So my journey is a bit of a weird one. I guess it starts in August 2019 when I just turned 18 and I decided that I was going to invest in stocks. My first ever deposit into the stock market was £200, hence me having the article come out about myself of turning £200 into over £200,000. However, prior to this, I'd actually run my own businesses. So throughout going through sixth form, secondary school, I'd never actually had any part-time jobs. I'd been fortunate enough to be able to set up my own businesses and just sort of run them throughout the entire, school term and even carry them on to date. And so that was the capital that I would constantly just inject into the markets. And the reason as to why I was so open to invest in the stock market rather than, anything else at the time was the fact that I'd sort of gone to loads of MLM meetings. So I would literally just Google Eventbrite, try to look for any entrepreneur events, simply because I'd gone to one I think a few years ago and met some really great people that I even speak to date and I'm really great friends with. And so I tried to look for something similar, but I'd never been able to find something similar. What had ended up happening was that I would find myself turning up to loads of these IML, MLM sort of pyramid scheme type events. And they seemed really sketchy in the sense that there's a really well-known statistic in the forex and trading industry that I think it's 96% of trading accounts lose money consistently. And so knowing that statistic, trying to get everyone onto this idea of trading forex just doesn't sit right with me. It feels just really sketchy and a very weird thing to do. However, they constantly push this idea that if you work hard enough and recruit enough people that you'll become a great forex trader, and I just didn't believe it. And at this time I was trading myself as well, and it was just a very uneasy feeling. But what brought me to the stock market, however, was the easy accessibility and then also this idea of capital allocation. And capital allocation for me just means allocating your capital into company and causes that you believe in so that they can grow in the long term. And so in doing this, I'd invested, just on a regular basis, just a couple thousand a month, and just left it and let it grow. But what happened in March, however, of 2020 now was obviously the crash because of coronavirus. And during this crash, I'd never experienced one before. It was sort of new to me because I'd invested right on the end of the bull run that we'd had for the longest period ever almost. And so when COVID hit, it was kind of like, okay, cool. All these great companies that I want to invest in are now heavily discounted. And so I'd gone quite heavy into the markets at this point because I saw it as an opportunity, and my risk tolerance is probably the highest that it could be. And so I was just piling in money into the markets for, I guess, a period of a few weeks to a few months. And I had over about 100,000 invested into the markets. And at the same time, the actual return that I was getting on the investments was just through the roof. And it could have been luck, it could have been actual skill. And obviously, to negate the factor of luck, I'd actually started my ISA in November and saw even better returns investing in my ISA during a time of market downturn in comparison to my much larger investment portfolio, which, looking at it now, is actually a lot more safer than the stocks that I'm investing in my ISA. I'm investing in a lot of pre-revenue stocks, trying to analyze cash burn rates, etc. But anyway, after seeing this type of return on my larger portfolio, I remember going out to a dinner with a friend, and a friend obviously had friends of friends, as did I, and we discussed a number of things. And one thing that came up was, I think this woman, she was actually a part of a private equity firm. We'd exchanged numbers and met up later on that month, I think it was, and she'd actually given me another contact of somebody actually in the private equity firm to say that obviously if you meet all of the requirements, I think on the FCA they show up as if you're making, I think, £100,000 a year, or either having £250,000 in assets, then you qualify as a high net worth investor. And that would be enough for you to qualify and to be open to, I guess, other investments that the general public just wouldn't be available to. And so I'd taken the opportunity, I'd given them a call, and they were really happy for me to actually jump in and become an investor. And what actually happened was they'd invited me to, I guess, a drinks event, and they'd sent drinks to my house, literally loads. I'd given them all to my mom because I don't drink or any of that kind of stuff. So yeah, it was like a really nice introduction to the firm. Everyone's been great. And from there, I guess I've been open to a wide range of opportunities. So from the age of 18, I've had all these opportunities thrown at me, emailed to me, calls about loads of different things, but nothing could really just spark my interest. However, very recently, I'd had a company proposal, and it was really good. It was a company that I've actually used their services before. Just because I'm not too sure for disclosure purposes, I haven't actually spoken to the firm in too much detail to see what I can and can't disclose. But if anything, I'll definitely create a separate video on the company that I've actually invested in. And so it's a company, services I've used before, and the growth just seems crazy. I mean, if they do hit the targets that have been proposed to us, then the return on investment will most definitely be worth the investment. And the time period in which I'm waiting, obviously, with private equity investments being long term, this investment is actually for a 4-year term. So I'll be 23, potentially even 24 by the time I actually cash in my investment. And that was essentially my journey from going from putting £200 into the markets, and then almost a year later having almost $250,000 in assets, and being open to opportunities that I guess I just never would have thought of before. And as of now, I still haven't actually made the investment. But what I'm actually going to do is go onto my phone now and open up the Barclays app and make the investment live on call. And the reason why I'm doing this isn't to discourage anyone or make anyone feel as if this is any type of flex, but it's mainly because when I had the article come out about myself featured in The Sun and multiple different news outlets across the UK, there was more an idea of, this guy does fraud, he isn't what he says he is. And for me, coming onto YouTube, it's just the fact that this will be, I guess, the proof that I am doing what I say I'm doing. I do also have a letter of obviously verification that I've sort of met all the requirements and I've become a verified member of the private equity firm, but I won't show that again for disclosure purposes. But everyone who follows me on Instagram and Snapchat, you'd have seen, I guess, all of my portfolios and sort of everything beforehand. And I may even reveal them on this channel at some point in time. But for now, hopefully we can sort of get the video to just speed up real quick, just while I show sort of glimpses of my phone, of the actual Barclays app. And then after, I'll give some recommendations as to how you could potentially get involved and see if private equity is ever right for you.
Okay, so funnily enough, I just had this message come through from Barclays just to say, we'd like to confirm a payment's being made via your online banking. I'm going to click Y for yes, and hopefully that should go through now.
Cool, and there is all the proof. So there's the notification on my Barclays banking app. I replied Y, and the payment has finally gone through. So that is my first private equity investment being made. That was really long, but we finally got it done. Yeah, that's my first private equity investment being made. I'll probably call my mom. I mean, it's really late. I think it's 20 to 12 right now, currently, UK time. So yeah, I'm gonna get home, get some sleep, and let my mom know the investment is made. But one thing that I did want to say was that if anyone is interested in investing in private equity, obviously it's been a long journey for myself. It's something that I've never really aspired to do, but I guess looking at it now, it's like I've always been like the what's next type of person. And I would definitely recommend that if you want to get invested into private equity, start out in index funds. If you're somebody who isn't too sure whether they're interested in finance or stocks or any of that, index funds are great because you're almost guaranteed a return. And I think the annual rate of return for the S&P 500, I'm not going to go for any specific time period because this figure will definitely be wrong, but I think it ranges from anywhere from like 7 to 12% a year, depending on, I guess, the time scale in which you wish to sort of pick to calculate the average rate of return, which is great for anyone, to be fair. And if you are more into finance and you do wish to become some sort of financial expert, etc., then I would definitely recommend investing in individual stocks. As when investing in individual stocks, you're more or less going to be open to loads of different things, loads of different, I guess, calculations, ways in which you can value companies, ways in which you build your conviction for making your investment. And for anyone who, again, is interested in Forex, one thing that I want to do is a little giveaway. So in the description below, I'll have details as to how you could sort of win the chance for me to cover your losses. I'm going to pick 5 different people, and I don't mind kind of bringing you guys onto the channel and sort of going through the process of your trading journey. Even if you just jump on and take a loss, we can document it, record it, put it on YouTube, and sort of just say that you've had that experience. I'm going to pick 5 people. Again, details will be down below. And if you want to learn more about my journey, then please do check out my other video, man.